Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me is Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq 100 weekly performance. And Ryan, it's been quite the week since we met last Wednesday.
Yeah, a lot going on over the past week, and a tough week for the Nasdaq 100. As you can see in the first chart here, QQQ and QQQM were down 4.17% versus S&P 500 down 1.27%, and S&P 500 value up 1.25%. I think a lot of the downside pressure was based on inflation fears. Last week we briefly discussed that we saw producer prices showing the largest increase since 2009. And subsequently, we saw 10-year Treasury yields tick up to the highest levels since February of last year, approaching 1.40%. But yesterday, in front of the Senate Banking Committee, Fed Chair Powell helped to ease some of those inflation fears. Pointing to the fact that inflation is still running below the Fed target. We're well below full employment, and noted that economic recovery likely would take some time, which kind of leads to the continuation of the Fed's pretty accommodative policy. And after his discussion, we did see stocks reverse course rather sharply and rally into the close. That optimism kind of continued today as we're seeing widespread gain across the board.
And Ryan, what sectors are lending to the performance?
Yeah, so I think when you look at the sector chart, you're seeing these value-driven sectors kind of leading performance, which is no surprise given that S&P 500 value was positive on the week. Within the S&P 500, there were 5 sectors in positive territory. 4 of those sectors, QQQ has no exposure to, and one of those sectors, it's significantly underweight. So you saw real estate, you saw materials, you saw industrials and financials all in positive territory, and energy leading the way up 6% on the week. Energy is benefiting from increasing crude oil prices. As you look at the month of February, including today, the WTI spot price based on Cushing, Oklahoma, is up in 13 of the 16 trading sessions. So we are starting to see that price increase, maybe ahead of increased demand, right? Suggesting a potential summer driving season again. I think that's a lot on the back of the continued vaccine distribution rollout, where we've been seeing some optimism and positive data on that front, leading to greater human mobility and ultimately kind of a return back to normal. So, people over the past week, it's very evident, had gravitated towards those value-driven sectors ahead of this recovery reopen trade.
Yeah, Ryan, it's interesting when you think about inflation and interest rates working hand in hand. Once we get the vaccination rollout really going full steam ahead, that's when you start to see the demand in the services sectors, when you start to see the demand for oil. And I wonder if that will, if perhaps the bond market is pricing in more demand expectation than perhaps the Fed is.
Yeah, it could be. I mean, I think with this, we're seeing a lot of push and pull, right? Depending on the week that we discuss, we'll see investors gravitating one way or the other. But certainly, I think you're seeing some of that price in, and it'll be interesting to monitor here over the next couple of weeks and months.
All right, Ryan, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.